For the Investing News Network, I am Brian McGovern at the MJBiz International event in Toronto with Codie Sanchez, Managing Partner for Cresco Capital. Codie, thank you so much for your time today.
My pleasure. Thank you for having me.
Codie, obviously a lot of your focus relies on the private cannabis investment market. Can you give me a bit of an update on the uptick that we've seen so far lately in the space and sort of what is the state of things from the private investment side?
Sure. Well, I think there's naturally an arbitrage that happens between public and private markets. So that's where we play. We're looking for where do companies actually have opportunity to grow before they get public, and the broad mandate or audience is available to everyone. And so what we've seen in sort of the last couple of months is mostly volatility playing on the public sides. How that's affected the private markets is interesting. We've seen a lot of valuation decreases by companies, and they're not able to raise at the sizes that they were previously. We haven't necessarily seen very many down rounds or haircuts on the total amount that they can go and raise at, but we certainly have seen companies have a harder time raising, which is good for us as investors, and a pullback on some of the more ridiculous valuations we saw in the market.
Talking about those valuations, that's something that the public markets have definitely seen quite a while set of runs in that aspect. From the private point of view, you've already mentioned a bit of those effects. But can you talk a little bit more about, what are the results or what are the effects of the public expectations and the public valuations that then, how does that translate into the private space?
The public is nuts. I mean, if you look at actually what's happening in public markets in cannabis, in my opinion, we said in December of 2008, public stock markets in cannabis are overinflated. And I wouldn't have bet against some of the biggest guys out there knowing their leadership teams and being early investors in them. But why would I invest in somebody that's trading at a valuation or a multiple that is almost impossible for them to hit? And so we've really seen that market, I think, sort of pull back. And what that means for private investors is we have a lot more leverage than we've ever had before. There was a good 6 or 12 month period there where, as a private investor, people were coming to me and saying, "Hey, Codie, no problem. I have no revenue, but I'm raising a $300 million valuation." And really with no backing behind it. The frustrating part was that these guys were getting investors to actually come on board at that level. Thankfully, our team has always been pretty value focused, and so we've said, no way, we're going to invest early, we're going to take a risk on a company, but that means that they need to give us reasonable valuations because, hey, this isn't a Tinder date. This is a marriage between us on the private side. We don't get to go in and go out like people do on the public markets and really look for the next guy to take it at a higher price. We have to be there for the length of the investment. So while this downturn is painful a little bit in the broad markets and certainly doesn't hurt or doesn't help our public portfolio companies, it's really good for private markets overall, and I think it's good for the industry and needed to happen.
You mentioned some of these companies that are presenting or requesting raises, and in the public space as well is something that we've seen a lot of in terms of hype or over promotion. But it definitely feels, or a lot of experts are agreeing that the movement it's more towards an established metrics and a lot of these proven track record details that are needed nowadays to invest. But at the same time, a trend such as CBD in the U.S. is overtaking everything, and a lot of other people are saying add CBD to your pitch and it goes up. How difficult is it to navigate the space right now when it comes to investment opportunities that come your way, or when you see deals that get done in the public space as well?
Well, I'm a little bit cautious about CBD overall. We are in general at the fund because the FDA hasn't really been very clear on guidelines for how they're going to regulate something like CBD. I mean, we saw early purchases like Manitoba Harvest for their sort of hemp line, but that's different than some of the benefits or positives that people say they get out of CBD. So I'm very cautious for anybody that's making any guarantees or pronouncements on what their CBD products do. So if you put CBD on your deck with us, I would be careful. If you just say it includes CBD, just like it might include coconut oil or any other type of adaptogen, okay, that could be interesting. But I'm much more interested in what does your distribution model look like? What does your cost of client acquisition look like? Typical sort of venture style models in this industry we're talking about, which is CPG or consumer packaged goods. So that's one, is be careful of the three-letter word CBD because it might have the bigger three-letter guys coming after you if you are making any inappropriate guarantees. The second point there, I would say, is across the board, just because big investors are now able to invest in hemp and CBD due to the fact that it's nationally legal, doesn't mean that those valuations are warranted. I mean, a big thing that continues to worry us is the lab testing in CBD and THC and throughout the cannabis space to make sure that you're in fact even getting what you're paying for, and that the, let's say, onset that you talk about is real. So I think it's the Russian proverb of trust but verify.
And, you mentioned you have a little bit of caution regarding CBD. What are the areas of the market that really excite you right now that you're interested in or that you're gravitating towards?
Yeah, well, I'd love to find a really incredible THC hard seltzer, and then we could create this next wild range of seltzer takeovers that we're seeing in the U.S. I wish we would have seen that trend first. So I would really like to see beverages done well in THC. I would love to see THC socialized, which we just haven't seen. I mean, it's not really very social to have a joint or a vape pen and be passing it around. It's really not how humans have learned to socialize with any sort of psychoactive like alcohol. And so I would like to see beverages. That's one area we're really pushing on. The problem there is there are a few specific keys you have to have with beverage companies that come down to distribution. And really, we haven't seen anybody do distribution well in the beverage THC space. So that's one area we've been looking at. I'm also really newly interested in sort of the renewables and sustainables that can come from hemp. And so I'm interested in how could we get rid of single-use plastics in the industry and replace it with, long-term stable hemp products. How could we do that with things like hempcrete? Now, I don't know the actual investing return on those products. That's something that we have to dig into more. Will those always stay niche? Or, given this new generation and the focus on sustainability, can there be really viable, big VC-type businesses out of it?
You mentioned the beverages. That's something that in Canada there's a big focus on as edibles come into play later this year. Admittedly, a slow rollout, but beverages are set to make a big entrance. How closely are you going to be following the rollout of this market, and what are the kind of things that you're expecting to see when it comes to these products being introduced in a fully legal national program?
Very. I mean, one of the companies that I sit on the board of is called Mocana here in Canada, and it's run by a female CEO, which I try to support as many of those as I can. And one of their focus is to kind of replicate a little bit of what Tokyo Smoke did. And so they essentially want to go out to the market, create sort of this matcha mushroom coffee, sort of super hyper healthy organic and healthy foods, beverages, and have the eventual inclusion of THC products in it, not dissimilar to the coffee model that Tokyo Smoke did. So I'm interested to see if they can replicate on that. It's actually backed by Lauren Gertner of Tokyo Smoke, and I wouldn't bet against them, and I think they have an immaculate branded presence if, in fact, you can ever showcase that in Canada and they change their packaging laws. So we'll be watching that closely, and I'd love to see how consumption lounges roll out in Canada if and when that goes into effect.
And as a last thing, on a grand scheme of things, when it comes to private versus public, it's some of the benefits and pros and cons of both are very evident for an investor point of view. But from you, when you're speaking with these companies that maybe are evaluating either approaching a private firm for funding or maybe even considering a public launch on one of the Canadian exchanges, something like that, how do you react to a company that's deciding between the two, and what do you tell them about the private space that is a benefit compared to the public space?
One, I think companies in cannabis are going public way too early. Period. Full stop. Be very careful about going public before you actually should. And companies are underestimating the amount of reporting and disclosures and the strain that can place on them. I can't tell you how many companies we've consulted with, invested in, worked with, who have just gone public too early. And while they may be executing on all of their metrics and goals, the market is still not benefiting them. And it really has very little to do with fundamentals. So my preference is always, don't go public early. stay private for a longer period. Now we're starting to see the first sort of revolving credit lines come out for cannabis companies in California in particular, and I'm sure there are other ones across the U.S. that are kept pretty private. I would love to see companies start to lean more on debt. These are capital-intensive businesses. They need the debt for receivables. They need the debt for equipment. They should be using it for that purpose, as opposed to an IPO is really when you're when you have reached maturation, and as a company you're looking to massively grow and potentially acquire. All of these companies are sort of flip-flopped because while Canada's done something amazing, which is give the industry any liquidity whatsoever, it's also very hard for brand new startups to even exist, more or less be treated like public companies. So I'd say don't go public early, stay private as long as you can, try to leverage debt now, and raise while the raising's good.
Well, Codie, thank you so much for your time today. I really appreciate it. For the Investing News Network from MJBiz International in Toronto, I'm Brian McGovern.